close with the Q&A session. First, we would like to emphasize on the key highlights for the period. On the macroeconomy, Vietnam demonstrated a robust growth despite global uncertainties in the first quarter. GDP growth in the first quarter reached 7.8% year-over-year, the highest first quarter growth in the past 9 years. Retail sales, excluding the price appreciation factor, have increased by 7% year-over-year, reflecting resilient domestic consumption despite global volatility, albeit lower than the first quarter last year. FDI disbursement have up 9.1%, keeping Vietnam among the countries with the highest FDI growth. Together with the government's recent bold move on supporting the private sector, this will support well for the job creation and income growth, which we expect to benefit the retail market. On the company side, Vincom Retail's occupancy rate have improved to 88.9% as of the first quarter of 2026, up 2.8 percentage points year-over-year, reflecting a healthy tenant demand and effective leasing execution. Overall footfall across our shopping mall network have increased by 13.2% year-over-year, while footfall at our commercial streets have risen by 15.9%, supported by attractive campaigns and experiential offerings. Vincom Retail's recorded total adjusted consolidated revenue of 2,574 billion in the first quarter, up 20.7% year-over-year. Should they add back the sale of investment properties, which have presented separately on the financial statement under the VAS, note 25. Net profit after tax of 1.6 trillion, up 36.4% year-over-year. In terms of leverage, as of March 31st, 2026, we have maintained a strong balance sheet with a low net debt to equity ratios of 4.9%, reserving flexibility for future investment. In the coming pages, we'd like to discuss on our performance and result this year in more detail, starting with an overview of the markets. Despite external uncertainties, Vietnam continued to deliver strong economic growth in the first quarter, keeping the country among the fastest growing economies in the region. Inflation, however, have inched up slightly above the government's target in March due to the increased energy costs, putting pressure on the government's policy and the economic growth. Manufacturing indicator have also improved steadily as export activity have recovered and business confidence strengthened. FDI disbursement accelerated in the first quarter, reaching a record high, contributing to the income growth as well as strengthening the domestic consumption demand. Retail sales, excluding the price increase factor, have increased by 7% year-over-year, continuing to grow, although at a slower pace, mainly due to the impact of higher fuel price. However, the discretionary demand shares measured by accommodation, F&B, and tourism revenue have expanded to 13.5%, the highest in 5 years, supportive for the modern retail formats and destination malls. Now moving to the update on the retail real estate market. According to CBRE, the supply of new retail space in first quarter remained limited, with only around 58,000 square meters being added in Hanoi, while in Ho Chi Minh City, the number remained unchanged, resulting in a minimal impact on the total market inventory. The vacancy rate stayed stable across the quality assets. Asking rents in both CBD and non-CBD locations continue to trend upward at a single-digit pace. Now, I'd like to walk you through the key business and operational updates of Vincom Retail in the first quarter of 2026. Vincom Retail continue enhancing the product offerings and elevating customer experience across destinations. In the first quarter, newly leased and expanded space continued to be led by F&B and entertainment tenants, which together account for the majority of new take-up. In parallel, we continue to upgrade and refresh multiple malls across the portfolio. Refurbishment works focus on facade, ceilings, flooring, lighting system, and interior aesthetics in order to maintain strong customer satisfaction and mall competitiveness. Especially, we'll carry out major renovation at Vincom Plaza Ha Long, upgrade of Vincom Plaza Da Nang into a Vincom centers with upgraded facility and upgraded tenant mix, which will help yield better performance. We also remain focused on enhancing customer experience through events and activation. During the quarter, we have organized almost 3,000 events across the shopping malls and 272 events of commercial streets nationwide. Footfall across the shopping mall network have increased by 13%, while footfall at the commercial streets have increased by almost 16%. The improvement demonstrated continued recovery in retail consumptions and effectiveness of our customer engagement initiative. Some updates on our key development pipeline for 2026. As we also shared in the AGM yesterday, in 2026, Vincom Retailers continue to pursue disciplined expansion in high potential locations. We're on track to launch Vincom Plaza Dan Phuoc in the third quarter of 2026. We're also preparing for the launch of J-Town in My Lâm, Tuyên Quang in the fourth quarter of 2026, designed with a Japanese concept, supported by a rare onsen hot spring in the north of Vietnam. The project will create a differentiated lifestyle destination and complements our expanding commercial street model. For the shopping mall segment, we have secure investment approvals for approximately 764,000 square meters of GFA being secured, while a further 980,000 square meters is currently under advanced research and feasibility assessment. For the Vincom Collection commercial street model, the total pipeline land area is 3.5 million square meters at the moment, with further upside upon completion of further legal procedures in other projects. In the first quarter, we also reinforced our position as the preferred destination for leading domestic and international brands. Our leasing momentum remains healthy, supported by continued interest from both existing and new tenants. At the same time, we maintain a well-diversified tenant base across local and international brands. This reflects the resilience of our portfolio and the continued attractiveness of our properties. A number of well-known brands continue to expand with Vincom Retail, including Wilson, IEF, Nitty Baby, Mr. DIY, Since Tea, and other reputable names. This demonstrates the trust that tenants place in our platform and the long-term attractiveness of our malls. During the quarter, Vincom Retail hosted a major tenant conference with over 500 strategic partners in attendance, reaffirming our commitment to supporting tenants' future expansion plans through close partnership and proactive engagement. Beyond operational performance, we have blended ESG in our long-term strategy and actions. On the environmental front, we promoted green lifestyle campaigns and further advanced digitalizations across our operations. From a social perspective, we supported local communities through Tate gifting programs while continuing to invest in culture and talent development. On governance, we enhanced transparency and shareholder engagement through the early publications of AGM materials, improved disclosure quality on our published annual reports, and continued improvement in corporate governance practices. Now moving on to the business and financial update section. Looking at the key metrics of the first quarter of 2026, our overall occupancy rates have improved by 2.8 percentage points year-over-year to 88.9% as the first quarter of 2026, reflecting the continued recovery of tenants' demand together with the company's effective leasing execution across the portfolio. Compared to the first quarter last year, Vincom Retail's total retail GFA have increased to approximately 1.9 million square meters, reflecting the contribution from malls opened in 2025, including Vincom Megamall Royal Island, Vincom Megamall Ocean City, and Vincom Plaza Ving. Total revenue and leasing revenue continue to grow solidly by 7.6% and 9% year-over-year, respectively. This growth was supported by higher occupancy rates, healthy tenant demand, single-digit rental growth across existing malls, and the contribution from newly opened assets. In line with this performance, leasing NOI have increased by 4% year-over-year. EBITDA increased by 4.3% year-over-year to 1.4 trillion, while net profit after tax reaching 1.6 trillion, up 36% 4% year-over-year, demonstrating a strong earning growth and disciplined cost management. Now, I'd like to walk you through the detailed financial performance of Vincom Retail. In the first quarter of 2026, our net profit after tax have reached 1.6 trillion, representing a strong growth of 36.4% year-over-year. This solid performance was mainly supported by continued growth in our core leasing business, with leasing and related service revenue increasing 9% year-over-year. In addition, financial income have increased quite significantly during the quarter, primarily driven by interest income relating to the BCC deposits that have been put with other developers at the end of 2025. We also recorded higher other income, with further supporting overall profitability. In the first quarter, we have achieved 25% and 30% of the full year guidance for the revenue and net profit respectively. It should be noted that we have added back the revenue of 280 billion from selling one non-core investment properties in Ho Chi Minh City in the first quarter. Further detail can be found on note 25 to the consolidated financial statement. Our leasing revenue have increased by 9% year-over-year, supported by healthy occupancy across the portfolio, positive rental growth of the existing malls, and the contribution from the newly opened assets in 2025. On the profit side, gross margin remained healthy at 56.2%, while leasing NOI margins stay at a strong 70.4%, demonstrating continued operating efficiency and disciplined cost control. On the balance sheet, we have maintained a resilient financial position supported by a healthy balance sheet and low leverage, which provides ample flexibility to fund future expansion opportunity. As of March 31st, 2026, total assets stood at approximately 61 trillion, while cash and cash equivalent remained solid at around 3.9 trillion. Shareholders' equity continued to expand, reaching nearly 50 trillion. We've maintained a low net debt to equity ratios of 4.9%, reflecting healthy capital structure and strong financial flexibility for future investment. With that, we'd like to conclude our first quarter update and presentation. Thank you for your attention, and we're happy to take any questions that you may have.
Now moving on to Q&A session. If you are dialing in from your desktop, please type your question to the chat window and send to the host account, display as Q&A moderator. If you are using your phone, please go to the participant list, choose to chat with the host Q&A moderator, and type in your question. Thank you.
We received the first question from Zoom. Can you share the pipeline for 27 and 2028? So I mentioned, as we mentioned in the AGM yesterday, in 2027, we plan to open one mega mall in Long An province. And the second mall will be an upgrade from the Vincom Plaza Cộng Hòa in Ho Chi Minh City into a Vincom mega mall. And we're planning for that. In 2028, we're considering between opening 3 to 5 shopping malls, including mostly the malls that relating to the high-speed railway in Cần Giờ, in Global Gate. Yeah, those are the projects. We received the further question from Tâm. Please provide a detailed update on any plan or ongoing support to VinFast. Actually, as you can tell, we're no longer supporting VinFast. I think it was a story 2 years back where we lended to certain Vingroup companies, including VinFast, but is no longer the case in the past more than 1 year since the divestment. We received a question from Miss Hong from Vietcap. I have a question regard to your 184.8 billion one-off gain from liquidation of project divestment from item 25. Which project is this revenue come from, and why the liquidation of this asset, and will there be more like this to come? So this is a non-core asset which we previously leased to a local hospital in Vietnam, and it is now being bought by the hospital themselves, and which resulted in the gain, one-off gain that we reported on the financial statement. They're just one more non-core assets like that in Ho Chi Minh City. This was a result of the acquisitions that we've done in the past many years ago to acquire land in Ho Chi Minh City, and we have this plot of land which is not suitable for developing a shopping mall. Then we leased this to a local hospital. We have another question from Sritab. Confirm your current average monthly rental rate per square meter. Based on my calculation, this rate appears somewhat low compared to broader Southeast Asia benchmark. Would you walk me through the structural or strategic factor driving this difference? I think comparing to these other Southeast Asian countries, I think depending on the portfolio, right? So if you compare the malls in Hanoi and Ho Chi Minh City, I believe is not much difference from other Southeast Asian countries. But in our portfolio, about 50% of our leasing GFA are located outside of Hanoi, Ho Chi Minh City, so where the rent is lower. But because of the low development costs in Vietnam compared to other countries as well, so the yield or the return on asset is still very good, which prompted us to invest in other city and provinces to expand our scale. And I think the case, the development pace of if the economic development status of Vietnam, I think Vietnam has going behind certain markets for a number of years in terms of economic development, except for the last decades. So I think that's why the key difference in terms of average rental per square meter. It is now over 22 US dollar per square meter, not including the service charge. So for the Vincom centers, the average it's somewhere around 50 US dollar in because the centers are only located in Hanoi, Ho Chi Minh City, where for other malls, the rental is around 15 to 20 US dollar on average. We have the next question from Chang. Can you help explain the balance of the kindergarten in Thao Dien? Is it a new business or non-core investment? Similar to the case that we have divested in the first quarter, we have a plot of land in Thao Dien, which was the result of acquiring the land plots for doing the Mega Mall Thao Dien. This land plot, it's a non-core business, and we look to divest in the future. We have the next question from Zoom. What is the target occupancy rate for 2026, and what are the key initiatives to achieve that target? As we mentioned in the AGM yesterday, we have the inventory, which is the vacancy rate of around 11%. And we plan to maximize the utilization of this amount in 2026, subject to the market conditions and balancing with the rental growth that we may achieve in 2026. And the initiative to achieve that target, I think, beside the leasing the unoccupied area like normal, we are upgrading certain shopping malls. So beside the Vincom Plaza Halong and Vincom Plaza Da Nang, which will be upgraded into, of which the Vincom Plaza Da Nang will be upgraded into a Vincom Centers, which would drive the average rent because we will introduce, higher or more premium tenants in the malls, which pays higher rent. We also renovate certain areas in the Times City Mega Mall. And together with the upgrade in terms of facility across the mall portfolio, as we have also presented in our annual reports, this year we expect to upgrade more than 1,000 items of CapEx, mostly relating to the facility upgrade. And with that, we can introduce more tenants coming in. And with currently the demand, and our intention is to continue to increase the percentage of F&B and entertainment in our malls, together with the international demand, international tenants, in the area of fashion, cosmetics, and well-being. I think we believe that we can somehow maximize the occupancy rate to over 95% in 2026. We have another question from Huyen. Could you provide more granular insight into the current tenant demand, particularly in terms of where the demand is come from, i.e., international brands versus domestic retailers, and which segment is showing the strongest rising momentum, such as F&B, fashion, or entertainment? So as we also show on the slide, actually, international brands account for about 1/3 of the newly leased area, and domestic brands accounted for about 2/3. It doesn't mean that internet or domestic brands have higher demand as compared to international brands, but this reflects a picture that F&B and entertainment accounted for nearly half of the total new brands, newly leased area in the period. And for F&B and entertainment, is quicker for domestic brands to start expanding rather than for international brands. I think timing is, it's a key here for experiential category tenants expansion. So this also answers your second point on who are showing the strongest leasing momentum. So they are F&B and entertainment, like we experienced in the past few years. And your second question is, given that Vietnam is seeing a growing number of new shopping malls from both international operators and independent brands, what strategies does Vincom Retail have to maintain this? What strategy does Vincom Retail have in place to maintain its attractiveness to tenants in this increasingly competitive landscape? I think on the broader picture, we're taking a look at the average GFA per capita in Vietnam. It's only less than 0.2 square meter per person, as compared to 0.8 to 1 square meter per person in Thailand or Philippines. So it makes that there's still a lot of headroom. And given the fact that Thailand's GDP per capita is only about 50% higher than in Vietnam, and their GFA per capita is about 4 to 5 times higher than in Vietnam. I think the competition in Vietnam is nowhere near the case in Thailand or Philippines. And regarding to your questions, I think if you look at this case, Vincom Retail is the only real estate commercial real estate developer who are able to expand our portfolio in the past 5 years. If you look at the case of Aeon, they would like to have like 20 shopping malls by 2025, and they ending up having 8 at the moment. Lotte could not expand, and Central could not expand in Vietnam. So I think the key here is the bottleneck in terms of land access. And for those who have been open, you can take a look at the close competition between Aeon and Vincom Mega Mall, Time City. Both are in Long Bien area in Hanoi, and both are very crowded. And the tenants' business is performing very well in both our mall and Arrival's mall, showing that the opportunity is out there, and the competition is not. It's not of the factor of concern at the moment. I think if you compare to particular projects, right? Our mega malls are normally located in a very dense area with high density of residents, like the Time City, Royal City, Ocean Park, Smart City, Grand Park. I think all of those areas, are in a very crowded area with high income people compared to the average in the city. So as compared to our rivals, malls are normally, let's look at, for example, Aeon. It's like in the middle of nowhere, so the cost to attract, footfall to the malls will be higher. And for Lotte, for example, their model is normally combine hotel and the retail podium and office. So the footfall is of course lower than in a residential area where it's more crowded. So I think that's the advantage of Vincom Retail as compared to any of our rivals in this market. For smaller players, I think they lack of the expertise of having a very large and professional leasing team and operation team. So they don't have the economy of scale to attract like big tenants or anchor tenants like Uniqlo, Zara, H&M, so on and so forth. So I think compared to the independent players, our rent it's a lot higher because we are able to pull in a lot of anchor reputable tenants and brands to our shopping malls. And another point I would like to highlight is that we constantly refreshing our tenant mix. So if you compare that pre-COVID, F&B and entertainment only account for about 25%. Now it jumped to over 45% only after 2 years post-COVID, reflecting our flexibility in terms of changing the tenant mix towards the trending demand from the consumer. Which even some of our rivals, they cannot match with this ability as they don't have the large tenant mix, tenant base that we currently have. The next question from Ming, could you please the shop house delivery plan in 2026? So we expect the revenue from inventory properties delivery to be more than 413 billion in 2026, of which we have recognized 280 billion relating to selling your non-core asset in the first quarter. The remaining are in Guangqi, Donghua Guangqi project with the backlog of 55 billion and another social housing projects attached to the Donghua Guangqi project, with the backlog of 170 billion. We have the next question from Tâm. Does Vincom Retail plan to resume publishing the financial statement under IFRS as the company did prior to 2019 to enhance transparency? So we are waiting further guidance from the Ministry of Finance, which stating that during the course of 2026 to 2029, they will build the VFRS. They're going to build 44 accounting standards under the VFRS, which will be published for Vietnamese companies to apply. Now that subject to the most recent requirements from the Ministry of Finance, only companies which are located in the international financial centers are subject to compulsory IFRS application. So I think according to this roadmap by the Ministry of Finance, Vincom Retail is going to apply IFRS after 2029. We have the next question from Hồng. Sorry, the non-core gain from hospital buying back is Vinmec or what organization? No, we're not buying back from Vinmec. We have an investment property which was previously leased to a local hospital in Vietnam, not Vinmec, and we divested that investment property in the first quarter. And the revenue of 280 billion and the profit was 184 billion was included in the 2026 guidance for revenue and net profits. The next question from Michael, the CapEx guidance for 2026 and 2027 as you build and upgrade malls. I think we budget roughly about 380 to 400 billion Vietnam dong for upgrading malls in 2026. We haven't had the plan for 2027. Regarding CapEx for building new malls, I think we have almost fully provided for, as of now, because in the first quarter, we extended another more than 100 billion relating to the malls that we are going to open in 2026. The total estimated amount of deposit to secure a future mall may be around 2 trillion in this year, 1.5 to 2 trillion in this year, depending on the legal approval that we may obtain for these projects. So that's currently the estimate at the moment. The next question from Tâm, please provide a detailed update on any plan or ongoing transaction with Vinhomes and its related party. So, relating to the transactions with Vingroup and Vinhomes, in the first quarter, we have deposited another around 200 billion Vietnam dong to complete, Vincom Plaza Vinh and Vincom Plaza Dan Phượng. Those are the two shopping malls. One was opened last year, and one is going to be opened this year. And as I mentioned in the previous question to Michael, the total expected budget for deposit relating to BCC with Vingroup and Vinhomes this year may be around 1.5 to 2 trillion, subject to legal approval that the project may receive. malls in Cần Giờ. The Cần Giờ 1, 3, and 4, which is the one that connecting to the railway, and 2 more shopping malls in Cần Giờ. Beside the 3 projects, we also deposited relating to the Global Gate Mega Mall in Hanoi, and 1 mega mall in Long An, which we plan to start opening in 2027. And for other projects, they are all under feasibility studies, and we haven't paid any deposit for.
We've reached the allotted time for the Q&A, and now we conclude the earnings conference session. For the remaining questions that have not been answered,